Do you think that your operating teams have found EVA easy to understand and intuitively appealing, or do they find it difficult to respond to?
We tried to keep it simple. We tried to build, we built a little tool for them which we call the House of EVA. Really the top of the house for us has always been around total shareholder return and return on capital. But that's sometimes tough for a business unit or a value center to get their hands around. So we went to EVA for those units. And we said really it's made up of the two component parts, profitable growth. And so we looked to the commercial organization to really drive that profitable growth, and productivity improvements. And that productivity could be working capital. It could be cost per unit in the units. It could be procurement savings. It could be asset utilization and reliability, which has been another big drive for the business. And that incremental, knowing what the value of that incremental operating rate is to that profitable growth part of the business, has been very valuable to us, because we've been operating also the whole franchise more reliable and at higher rates. So I think the feel today for whether that next piece of business is more profitable or not is much, much higher in all of the business units.
Yeah, I think there's a very appealing aspect of what I call the EVA momentum math, that the 1% momentum statistic you cited. Well, you can accomplish that either by raising the ratio of EVA to sales, your EVA profit margin, which covers all of the P&L and balance sheet productivity levers, and you can also couple that with driving sales growth that's profitable, where you end up with a positive EVA margin that grows. So it's a double piston engine, whereas many metrics are only one or the other. This brings both perspectives together. And I would think that would be extremely helpful to have one score that combines all the elements that you as the chief operating officer would want your team to worry about.
So in our automotive business is a good example, and automotive has been on a pretty good track over the last several years around the world in terms of automotive production. We had a business that needed to improve, and what they did in the near term back in the 2012-13 timeframe was looked at the portfolio of development opportunities that they were working on, and they basically homed in on those opportunities, and they said some of these that we're working on are not going to deliver profitable growth. They stopped those development projects. They focused in on their higher growth projects. And then they developed a mindset that we want to grow above industry. And so if you look at the automotive industry, it's been growing at about 3–4% per year. They've been consistently for the last 3 years growing above that rate by focusing in on their better performing products, on the products that were driving higher rates of return for them. And it's been a fantastic story. They continue, every quarter they continue to set records with the performance of the business.